So we are going to look at this question called Skulpt. And in section C, of course, one of the things that you need to know is that when you are going to do a question, you have to first of all understand what is required of you. So that's what we are going to first do. So when you go to the requirements, okay. I've picked a section B number. I wanted to do a section C number. That's fine. Let us start with this one. Then we can look for section C number on the same topic if we find one. So now section B numbers differ from A because you basically have one scenario which you use to answer a couple of questions that are related. So in a way that makes it sort of like a small section C number, where you have to understand how things are following from each other in order to be able to answer it very well. So the first one, they are telling us that Skulpt is a manufacturer of electronic goods. One electronic device it produces and sells is the GSA. There are between 30 to 50 other suppliers of similar but non-identical devices in the markets. So the market is not unique. Each producer enjoys varying levels of customer and brand loyalty. So each one has people who buy from it. So we don't have a monopoly in this industry. It is very important to understand these things when you are reading, so that you probably find it important when you are discussing or when you are calculating, because it gives you context. As you understand, financial management is not just about the numbers, but also the understanding of the numbers. So the current selling price of the GSA is 250, and the directors are considering a reduction in price to 230. Market research commissioned by the company has suggested that the price elasticity of demand is 1.25. Now, here, if you already know, we are looking at demand and price elasticity of demand. So if you know it, then you know what the question is trying to actually ask you. But if you don't know it, then that's where you may need to understand what exactly is being asked. But this is about price elasticity of demand, and they are telling you here that the same market research suggests that the price schedule and the marginal revenue schedule for the GSA are given like that. So you have the price equation and you have the marginal revenue equation. Then you have production and selling costs for one GSA are given. So you have the variable production cost, then the selling and distribution cost, then you have the fixed production cost and the fixed selling and distribution cost. Now we have a new customer order. LKO has approached Skulpt with the bespoke one-off order of 5,000 units of GSA. They will be produced in Skulpt's factory along with all the usual production and delivered to Logco using Skulpt's usual distribution channels. The order is considered bespoke as LOQ has requested some additional finishing in the production process, which will generate an extra production cost of $6 per unit. So this is an extra cost that can be looked at. The units must delivered using a special packaging, which will going to cost another $2 per unit. The special packaging will be paid for and supplied by Log. Okay, so we need to understand that this $2 is not going to be incurred by us. Variable production cost includes the current purchase price of $7 per unit for the electronic chip. As the GSA is popular product, the chips are in constant use, and Skulpt has sufficient inventory of this to satisfy the order. Here, when you listen to it, you can hear some relevant costing happening, because relevant costs look at on the incremental cash flows. So the chips are in constant with their inventory. They were purchased several months ago at a discount rate of $5 each. Then we normally put a markup of 20% for all the one-off orders. So then there's also a new market. They want to sell to the country called Hakish, which allows the sale of GSA following a change in the law. So Skulpt's objectives are to set a minimum acceptable price, which is most likely to discourage new entrants. So now this is basically sort of like penetration pricing, where you put a price which is so low so that you get bigger volumes and also discourage new entrants. And then also they want to shorten the initial period of the product life cycle so that the growth is reached and the maturity stage are reached relatively quickly. So now we can try to answer this. So as you can see, there's quite a lot of content, but the good thing that I realized with section B numbers is that you not use all of that calculation. So if you look at what is asked of us, they're asking us for what is the least likely to be considered when setting prices, which is you choose from this. Then we shall look at price elasticity of demand. They're asking you here. Then there is a profit maximizing price. So here you have to calculate something, minimum price point, which would be set by Skulpt on the order, which is also something where you have to calculate. Then also, two following prices strategies are most appropriate. So you have a couple of questions there that are very easy to answer than the ones that may require you to make computation. Now, as a strategy for passing the exam, like we said, you're supposed to be looking at getting at least 50% of the marks on every question. So there is a lot to get here without even calculating, because remember there are 5 questions, and of course we have seen 3 of them. You don't need to calculate. So if you can get those, for some questions it is biased either way, but you need to make sure that at least those ones are correct. So now, like the first one says, which of the following factors is least likely? And also you have to understand when you are looking at these questions, you can't just read it very fast, because you may actually not see that least likely and choose something that you think is most likely to be considered. But here we are looking at what is least likely to be considered by Skulpt when setting the prices in its home market. And then we have the first one here, customer demand. Of course, we know that customer demand is going to be something that you should consider when you are trying to set a price. Okay, you need to know whether people really like your product, because if they do, then you can afford to increase the price and they still buy it. Manufacturing costs are also very important because they eat into your profits, so you need to understand them. You need to understand competitors' prices, of course, because when competitors are charging lower, then you can not charge higher, because when you do, unless you have a pretty good product and all that, then it may actually not be very beneficial for you. But then there is this one here, currency in the home market. Okay, so this is the answer we are looking for. And the reason why it is not important for us to consider, because when you are in your home market, then you are selling in your currency of your home market. So you may not need to concern yourself about the currency in your home market, because unless you are planning to maybe export or something, import something, then that's when the fluctuations in foreign exchange might be a problem to you. But when you're trying to set in your own market, you don't have to worry about the currency. So that is the answer in this case. D, the one which is least likely to be considered. So now the next question says, which of the following statements about price elasticity of demand for GSA is true? Now remember, they told us that the price elasticity of demand is, I remember saying 1.5. Okay, 1.25. So price elasticity of demand is 1.25. Now, you need to understand what is price elasticity of demand. So price elasticity of demand looks at the percentage change in the quantity demanded after a change in the price of the product. So the demand can be elastic, demand can be inelastic. If demand is elastic, so you need to understand what it means. It means that when you change the price a little bit, the quantity demanded changes a little bit. Changes actually by a lot if demand is very elastic. But if demand is not elastic, then the price may not change so much. Now, given that our elasticity of demand is a number which is more than 1.25, so what does that mean? So we have four options. First of all, there is one which says elastic. Then there are two that also say inelastic. So if we understand what the figure means, okay, the figure is above, because for it to be inelastic, because the number moves. So for it to be elastic, then you need to know that the figure should lie between which ranges. So now this one of 1.25 is showing that it's above 1. Okay, so the price is actually elastic. It means that demand changes when the price changes. So, which means that you can already eliminate these two, because those ones are saying that demand is inelastic, but that's not true. So that means that you are left with now those two. So which one is going to be the correct one? So they both say that demand is price elastic, and they say revenue will increase if the price is decreased to 230. And here this says revenue will decrease if price is decreased to 230. Now, so let's see. If this is elastic, it means that if you increase price, demand falls. But if you decrease price, because we are trying to decrease price, demand will increase, right? So if demand increases, means that the quantity that is sold will increase. And then, if that happens, then means that the revenue will actually increase. Because ideally, we are going to be selling more units. Even if we have reduced the price, we expect the demand to increase, okay, higher than the price actually. So the answer here becomes A. If the revenue, actually, if the prices decrease, then demand would go up and revenue increase. Okay, so I hope that you are seeing how you reason through the question. In case you want to ask something before we proceed, you can ask. You can always interject and ask. So the third question asks about the profit maximizing price for the GSA. So, when do you maximize profit? So you maximize profit I don't know if you know this curve, where here you look at marginal revenue. This becomes marginal cost. And then here where they are equal, it means that here we have some sort of equilibrium where the marginal revenue equals marginal cost. That means that at this point, you are incurring an incremental amount of money and you get the same incremental amount of revenue, which means that you are at a point where you are going to start earning profit. So that's where you are getting profit maximization. So that's what we are looking for, where marginal revenue is equal to marginal cost. Now, so they gave us here the equation for marginal revenue, 450 minus 0.4Q. And then for the marginal cost, by definition, looks at the variable costs. So we do have the 30 and we have 24. So marginal cost in this case is the sum of these two, which is going to be 54. So we have those two figures. So we know that marginal revenue is equal to 450 minus 0.4Q. And we have said that marginal cost is equal to 54 when you have the two variable costs added. So the point where those two figures are equal means that 450 minus 0.4 is equal to 54. Now, I don't know if you have a calculator that can do that math, or you know how to arrange it. But what you have to do in this case is to just say 450 minus 54 divided by 0.4. That gives us our quantity. So, which gives us 990. So this is the point. So the quantity is 990. And the question is asking us profit maximizing price. So after we have this quantity, then we can just use the equation given to us here. So now I'm looking for the price equation. It is given to us here. So since I already have the price equation, I can calculate now my price. So 450 minus 0.2 multiplied by 990. So which gives us 252 on my calculator here. So that's the price. Okay, remember the question was asking us to calculate the profit maximizing price. So that is 252. Now, you need to always look at what they are telling you in the brackets whenever you are going to put a number here. They're saying nearest whole number, so the answer has to be 252. If there were some numbers, maybe decimals, you would have to round off. Okay. Now, the other question they're asking us is, what is the minimum price unit which could be sold, price per unit that could be sold, set by Skulpt in respect of the lock order? So for this one, you need to look at the costs that are relevant to your decision. So that's where I said we have to look at relevant costing. if you remember what they told us about this scenario, for the new customer, so they told us that this customer wants 5,000 units. So they will produce them in the factory along with all of the other products, but they are going to incur an additional finishing. They'll get another production cost of $6 per unit. Then also another $2 per unit for packaging, but that will be paid by LK. Then there is also another $7 for the chip, but that chip already exists and we bought it at $5. So then we are going to also have to add up a markup. So now to get the minimum price that we are going to incur, so the product is 112, but here for this, the only thing that we consider are relevant costs that are usually cash flows that are going to directly be a result of what we are doing. So now, sorry, if we make these many orders for this new customer, definitely we shall incur variable production costs of 30. We shall incur variable selling and distribution cost of 24. Okay. But this production fixed cost of 40 and 18, these are usually just apportionments. For example, some of it is electricity. So electricity, perhaps for the machinery may be part of the production cost, because the more machinery you run, the more electricity you incur. But then there is also things like warehouse electricity for lighting. Those ones may not be affected by us producing more units. So those are fixed, so they are not relevant. Which means that for us, what we care about in this case is this 30 and this 24. And then also now we now look at the other things that we may find. So remember we said that the another costs that they took us, the extra production cost of $6. So now I told you that this 2 is going to be paid by lock, so you don't include it there. But then also this chip here of $7 that we said is needed, but we already bought them for 5. So it's not going to be something that we also include because we already purchased it. And then we just mark up. But the markup, when you are looking at the minimum cost that you are going to charge someone, you don't consider the markup because the markup is just on top of that. So basically, when you look at that, so that is 30 plus 24 plus 6, which gives us $60. So that will be our minimum cost. So $60. So now that is, you need to have looked at just the relevant costs. So this is where you have to understand the concept, because ideally, when somebody asks you this question and you don't know relevant costs, you may not know how to start. But if you think through the question, you may try to get the answer somehow. Or if you now like think about it in the light of what we talked about relevant costs, and now you understand what they mean, then when you are reading it, you understand it, and probably when you find it later in future, you'll be able to remember how to deal with it. And then lastly, for this question, they're asking for which 2 of the following pricing strategies are most appropriate for Skulpt. So they told us that they have 2 objectives. One, set a minimum acceptable price, which is most likely to discourage new entrants and shorten the initial period of the product life cycle to reach growth and maturity very quickly. So they have given us this, and they want us to choose 2. So the first one, transfer pricing. Transfer pricing is not an option here because it usually comes into play when you are selling to somebody you are related to, like maybe another division in the same company, maybe a subsidiary in another country, that kind of stuff. But here we don't have that. The other one is skimming. Skimming won't work. But skimming usually applies when you want to sell something very expensively and get as much money as you can in a short while. But that means that you're going to create a situation whereby competitors actually are going to benefit because then they will charge lower than you, and then you won't get the money you need. So in that case, it won't be skimming. Market penetration is one option because, as we said, they are trying to set minimum prices, which is going to likely to discourage new entrants. That's usually what we call penetration pricing, where you basically try to charge a low price so that you get many clients. Then after they understand what you are doing and everything, maybe you can start to gradually increase it. So that is important, but also relevant costing. Relevant cost pricing is what we have just done in this previous question, whereby we looked at only incremental cash flows that will be incurred or earned. So from actually doing a given activity. So you look at those costs, then after you basically uh, put a small markup so that you cover all your costs, and then you also get a small cap profit. Discrimination by product version is not going to apply for us here because, as you remember, they say that the products we have are not unique. There are so many other people doing a similar product than us. And they say we can't do complementary product pricing because they have not told us anything about complementary product pricing. Because this usually happens when you have a product that goes hand that is bought usually with another because they are complementary. Then you can choose to make one cheap and the other expensive to basically benefit from the fact that, for example, when you buy a fridge, then you have to okay, fridge may not be a good example in this case, but if you buy a clipper, the things that people men use for shaving their beards, then probably you need to be buying the razors to put in the clippers. So those are complementary products. So when you set one at a price that is low, then the other people will be buying. Now that they have already got this product, they have to keep buying the razors. So that is how this question is attempted. I don't know if there are questions or whether it's clear. Is there anything that has to be clarified on this question?
Okay. Everything else I think I understood because I was trying to also calculate along with you. Maybe what I missed out was calculating the minimum price per unit. At some point, I think I could not see your screen.
Oh, okay.
Then also, given because you see how they give us this question and maybe might be a bit bulky. So mastering how to respond to it, does it come with practice of okay, you have to do as many questions to be able to identify, or like is there a tip you can use to at least like not should I say not get confused? Because maybe that could be as a result of not practicing enough questions. I don't know.
Okay. Let me first give you the advice, then I go back to that question. So you see with these section B numbers, when you look at the time given to you, because anyway, it's going to apply even for section A. There are questions that, remember, when you are doing these questions, you need to understand that you have 180 minutes. So you need 1.8 minutes per mark. So you normally use this rule, and then you multiply by 2 for section A. So that is about 3.6 minutes per question. And some of the times you won't take half of it, but some you find you have taken 5 minutes. So you have to do a balancing action. So you need to know the time that is needed for the whole of section A, and then you try to work in this 3.6 minutes per mark per each question, but going under for most of them and a little bit low up above for others. It takes practice. Like you need to, the advice that I give you in this case here is that you have to go to the exam when you have seen all of the questions in the kit, this kit. Okay, some people used to have like even 2 kits, BPP, Kaplan, and they would do all questions, but I advise to just stick to 1 kit, but see all the questions. Because the more you see them, then the more chances are that the questions that are going to come might be somehow similar to these, at least in terms of how the bulk of them are, so that you can be able to know how you're going to easily do them. Now, like for this question, like I mentioned, there is this part which is very fast. There is this part A, number 1, which is very fast, number 2, which is very fast. So you had only 2 questions that needed you to spend more time on them, as opposed to these other questions. So given that you are doing 3.6 minutes per mark, okay, I mean 1.8 minutes per mark, and you are having here 5 questions, which is 10 marks. So you would have yourself 18 minutes for the entire question. But you would find that you have used here maybe 2 minutes, because what you have to realize is that reading this part is going to take you about 3 minutes. Okay, that is reading through very fast. Okay, you can read it through very fast, picking important information. That will take you about 3 minutes. Then you come to this question, you answer it in less than a minute, number 1, or even, okay, or 2 minutes, let's say. You come to number 2, you answer it in maybe 2 minutes as well. Then you come to number 5. So you could even first do number 5 before you do 3 and 4. You do number 5, you answer it. Then you see what time is left on the 18 minutes. And if you don't need all of it on these 2 numbers, don't use all of it. You just proceed to calculate it up and then you move. Okay, it comes with the doing this several times. Then you start planning on how to best attempt the questions. People usually find that when there are no calculations involved, it is fast thinking. It is true, but also it is true that you can fail to answer a number which is not for calculation in case you don't have the theory behind it. So you can be fast on numbers than text, but you have to balance it. At the end of the day, you need to make sure that you have attempted all questions in the time, and don't take time for section C. Because what people also do is that they take all the time for section A and B, and they reach section C and they don't have time to even get any mark, because they are panicking, they are doing all the wrong things. So practice when you are looking at the time. So if you are doing 10 questions, just multiply 1.8 minutes times 10 questions times 2 marks. Then you have that time. Sit down, do in that time. See how much time you have used. It will come like that. That's my advice on that. But back to the question of the minimum price that should be set. What we said is that you are looking at relevant cost. So we have to go and see in this what costs are important. Remember, they are trying to make 5,000 units of GSA for a new customer. So this price of 30, this price of 24 for the variable costs, these are going to still be incurred. So these are relevant. Now you start looking at what is going to be also relevant from the new customer perspective. There's this $6 per unit extra production cost. Then there's also this $2, but this one they're saying it's going to be paid by law. So this one won't be relevant. Then the variable cost of the chip would have been relevant, but these chips are already available and we bought them already at $5 each. It means that they are part of this cost here. They're already a variable production cost, so we don't put them again. Okay, that's what normally we call a sunk cost, or you can say past cost. Then also, you don't put the markup when you are looking at the minimum cost. So that's why we have 30 plus 20 plus 6. So that gives us 60. Okay. Hope that is clear now.
Yes, it is.
Okay. So this for me, section B questions can be easier than section A, because section A you get a question which is just random on a topic. You don't have time to think as you go through the others. So this one gives you some small time to think and rethink your answers. But both of those sections require you to have looked at so many questions. That's why I implore you to look at so many questions in section A and B. You look at all the section A and B questions of the kit as a bare minimum. Then you can have a shot at this. Now I wanted to do a section C number. So let us see. So section C numbers on decision-making techniques are also here. So I'm going to just choose a random one for today. Let's do MKL. Okay, so MKL looks at, when you look at what they're asking you to find here, is to see which of the four selling prices should be charged for product K to maximize contribution during maturity stage. Then calculate the selling price of product L during the growth stage, and then compare and contrast penetration scheming during the introduction stage using product M to illustrate your answer. So that is the question. So when you read the requirements, after having done this question several times, you will know which decisions you are trying to make here. But if you don't know yet, you're going to as you are going through the question, basically think about it. So okay, so we are now looking at the scenario itself. So they are saying that product M is currently being tested by MKL and is to be launched in 10 weeks time. M is an innovative product which the company believes will change the entire market. So innovative. So company has decided to use market scheming approach to pricing the product, reviews the product range and changes its existing products by developing the new models to satisfy the demand of the customers. They want to always have products at each stage of the production life cycle to ensure the company's continued presence in the market. They are reviewing the two existing flagship products, product K and L, and this is what they have told us. So, product K was introduced in the market some time ago and is now about to enter the maturity stage. The product K is about to reach maturity. They are going to last for 10 weeks for maturity. Variable cost is $38 and takes 1 hour to produce. Director is unsure which of the four possible prices the company should charge during the next 10 weeks. So they want some market, they've done some market research, and this is what they have. If they sell at 100, the demand is going to be 600. They sell at 85, demand will be 800. They sell at 80, demand will be 1200, and 75, 1400. So that is for product K. And if you remember, the question for the first one was just asking for product K. So you can already know what you're going to do for product K. You do have some selling price options and its demand. So you need to look at them and see which of them can be charged. And then now for product L, they're saying it was introduced 2 months ago. They use penetration pricing. So now they want to enter the growth stage. So they want it, they're lasting it for 20 weeks. Variable cost for each unit is 45, takes 1.25 hours to produce. Researchers indicated that there is a linear relationship between the selling price and the number of units demanded. And they have given you that this is the relationship. P is equal to A minus BX. At 100, the demand is going to be 1,000 units. Then for every $10 increase in the selling price, demand will reduce by 200 units. And for every $10 decrease in selling price, demand will increase by 200 units. So that is it for product L. And then they are currently they currently have a production facility which has capacity of 2,000 standard hours per week. And they're expanding, but the extra capacity will not be available for 10 weeks. Okay, so let us first look at product K. Product K, so now for section B, remember you'll be in the spreadsheet. So you need to know how to set up properly in that spreadsheet. So for product K, we have different different selling prices, different demands. So we can start with this. So we have 100, 85, 80, and 75. Then for demand, we have 600, 800, 1,200, and 1,400. And this weekly demand. So we have 600, 800, 1,200, and 1,400. So for this variable, for product K, it's going to be 10 weeks, okay? So this is, remember, the weekly demand. So, and the question is asking us, calculate which of the four selling prices should be charged to maximize contribution during the maturity stage. So, if you want, you can deal with it on a weekly basis, or you can get the entire demand. I don't think it's going to make any difference because we don't have fixed cost to absorb. So the variable cost 38. So variable costs per unit 38. Then it takes 1/3 hour. So we can make this a negative, and I can move this around because I want to have the selling price and the demand. So then I can get contribution. So contribution is always the selling price minus the variable cost. So this is the contribution. So if I look at now the demand, then I can get total contribution, weekly contribution. So it will just be the demand times the contribution. Okay, and that is the contribution. Now, ideally, they told us to maximize contribution. So if you want, you can do total contribution if you multiply this by 10 weeks, but it's going to still give you the same decision. And so don't do things that are not going to add to your that are going to add to your like to the answer. It's just going to just give you. Okay, so the maximum of this, if you look at them, is this one. So because it's what gives us the highest contribution, therefore we should sell at 75 per unit. The question wanted us to see which one should be charged for that. Okay, so the answer should be we should sell at 75 per unit. So that is how that will be done. Now, so but for L, so for L we need to now what you have to understand is that if we are selling for product K, each one takes 1 hour. We have only 2,000 hours. So now, so if we have 2,000 hours, so if we have sold at 75 per unit, so we have sold 1,400. So I'm just going to make this part A. So for part B, so as we have said, so how many standard hours are available? 2,000. How many hours used for product K? As we said, each one multiplied by 1 standard hour, so 1,400. So hours left is basically the difference between these two. So these are 600 hours. So if we have 600 hours left, then we need to come here and see how many hours. Each one takes 1.5 hours. So units for L would be the hours that we have left divided by 1.25. Basically, we can only make 480 units. Now, so they say that we are upgrading, but they won't be available for the next 10 weeks. But of course, this is going to last 20 weeks. So we shall see whether we shall get more time during that time. So they say that the equation that we should deal with should be P is equal to A minus BX. So P is equal to A minus BX. Now, how you get this? If you understand, because actually this is not just X, it is Q. Okay. Although they told us X here, the X in this case is the quantity which is demanded. So if you know there is a formula that has been given to you to use to get A and B very easily, but in case you don't know it, then you just create, uh, of course here actually we already have one of them given to us. For every $10 increase in selling price, demand would reduce by 200. So that can give us B. B is equal to 10 divided by 200. Okay, which gives us 0 point what? 0.05. Okay, and then now after you know B, then you can use P and Q. So we have 100 here and 1,000. So you can say 100 is equal to A minus 0.05 times 1,000. Therefore, you can get A. A will equal to 100 plus 0.05 times 1,000. So which will give us what? Okay, let's do that from here. $150. So A is 150. Therefore, it means that P is equal to 150 minus 0.05 Q. So that is the price equation. So after we know, you shall just say 150 minus 0.05 times the 480 units. So which gives us what? 126. So this is 126 in the first 10 weeks, okay? Because they are saying this is going to last 20 weeks, but K will have used some hours, okay? Because this is 2,000 hours per week. So 2,000 hours per week, which means that the first 10 weeks we shall share this between K and L. But then afterwards, after those 10 weeks, we shall now have the entire 2,000 hours. So for the first, so this is 126 for the first 10 weeks. Then now we go for the remaining 10 weeks. So for the remaining 10 weeks, when the other product has reached maturity, because let's see, are they going to discontinue it after that? Just entering maturity stage. So for you to look at what you charge in that now remaining time after the remaining 10 weeks, because the product K is now no longer being sold. So we just need to see whether how many units we should make, because then we have enough time. So how we deal with that now is to deal with it in the other same way we looked at the other question. You look at maximizing profits, looking at the marginal revenue and marginal cost. So when you have the price equation, marginal revenue is always given as A minus 2 to BQ. Okay, this is got when you are differentiating, but we don't need to know the logic behind. It is, I mean, it is given to you in the textbook, but you can just use the equation. So which becomes remember we already have the equation 0.05. So if you multiply that by 2, you get 0.1 Q. Okay, so that is the marginal revenue. And the marginal cost, of course, as we said, they are the variable costs. So the variable cost for product L is $45. So that is 45. Then you just do again 150 minus 0.1 Q is equal to 45. So Q in this case will be 150 plus 45 divided by 0.1. So what is it going to be? It's going to be 1,650. And then you can now get the price as 150 minus 0.05 multiplied by 1,650. And I feel like there is a mistake I've made somewhere. Should be 150 minus 45. So 150 minus 45. Because this one is too big of a quantity. Okay, which gives us 1,050. So let us see what that gives us. 97.5. So that is for the next 10 weeks. So basically what we are saying is that you first charge 126 in those first 10 weeks. And then in the next 10 weeks, charge 97.5. That's how you deal with this what product A. Okay. Then now the other thing that we are going to look at is just comparing and contrasting penetration and skimming. And ideally, here they are saying during the introduction stage, use product M. Now, product M, they told us that product M is an innovative product. And they say it will change the entire market. So, okay, this is what we are going to use. First of all, you need to understand what the two things mean. Market scheming and market penetration. So market scheming usually is done by companies that have products that are very innovative, like product M, where the costs of entering the market are high, and also the product has a very short lifespan. So you charge a high price, and then you get as many people buy the product, and then later on you reduce the prices. So that is what we call market scheming. On the other hand, penetration pricing is when you have a product that has a relatively longer life cycle. So what you are trying to do in this case is to charge a lower price so that you discourage people from entering the market. So usually it's for those goods also where the entry barriers are very low. So anybody can start. So you have to stop people from coming to the market by setting a low price. So you set a low price, you get a lot of customer loyalty, then afterwards you increase the price gradually. And it has to be for a product which has elastic demand. So that is what we are saying here. And then you can give an example that for product M in this case that will not work because if the product is innovative, it means that it is going to have very high demand, and for you selling it at a low price to prevent people from entering the market may not serve you best because you leave money on the table. So that is one of the things that you can point here. All right, so now one thing you should know about when you're answering section C numbers is that after you've finished doing your question, because it will depend on how the question is given to you. You have an option to write on the Word document, then also the spreadsheet. So, but what I'm referring to now in this case when we are revising is that when you answer the questions, you normally go and check the solutions as they are provided. And why you are going there to basically see whether you have done the right thing, also to learn how it is done faster. But most importantly, for some questions, this one doesn't have. For some questions, there is usually examiner's remarks. Okay, examiner's comments. Here, this one didn't have even a marking scheme. But for some, you'd find that there is examiner's comments, and those are things that you should be reading through to see what mistakes were done by some students in the past and also avoid them when you are doing the question yourself. All right, so is there any question from this?
No.
Okay. All right, so if there are no questions, I think we are going to stop here today. So usually what I advise is that when you do a question, you also go back and redo it by yourself, see how far you go, and then you strengthen yourself that way. So I'll put this video up on the system as well so that you can watch it if you need to. Have a good night and see you next time.
But will it be uploaded tonight?
Yeah, I'm going to upload it right now after it finished syncing. Yeah.
Okay, thank you.
You're welcome. Have a good night.
Good night to you too.